Welcome, everyone. Thank you so much for joining us this morning. As in our previous Coffee with C3 webinars, we're going to keep this to 15 minutes and we'll take questions at the end. My name is Celeste Moya, and I'm joined by our managing partner, Todd Healy, and our senior partner, Carolyn Smith. Today, we're going to be discussing life settlements. It's a financial tool that is frequently overlooked and commonly misunderstood. In the United States, those aged 65 and older are expected to double in 10 years to nearly 71 million. That's roughly 1 in every 5 people. What that means is that over 10,000 people per day will require guidance from advisors, like many of you on this call today, to fund their retirement and healthcare needs. Most policy owners think they only have 2 options when their life insurance policy situation either changes or their objectives change. The first one being letting their policy lapse, and the second one being, if their policy builds cash value, surrendering the policy and taking the cash. And studies show that Americans 65 and older forfeit over $140 billion of life insurance coverage every year by lapsing or surrendering their life insurance policies. That's what we call the known value of the contract. What is often overlooked is how to determine the unknown value of their contract. The secondary market, also known as the life settlement market, provides a way to see if the policy is worth more than the cash value. Even certain term policies can be sold in this secondary market. A recent survey showed that over half of all seniors allowed their life insurance policies to lapse. And further, 4 out of 5 were not even aware of this alternative. And 9 out of 10 seniors who did lapse their life insurance policy said they would have considered a life settlement had they been aware of the possibility. And that's why we find this topic of such great importance to share with you all today. So Todd and Carolyn, you have some examples of clients that we've worked with that have leveraged the life settlement option to optimize their financial situation.
Yeah, we sure do, Celeste. This goes back at least 15 years ago. I had a client who had many life insurance policies he'd purchased through us. One of them was a term policy that was coming to the end of its period. The coverage was going to expire. He did not want to convert it. He was going to let it go. It had absolutely no value. The known value was 0. And we went to the market and we were able to sell that policy for $90,000. And today, 15, 16 years later, he's still alive. So we turned an unknown value of 90,000 from a known value of 0. The second situation involved a banker who called me. He had a customer who was having very, very difficult financial times. The customer had purchased a business, and in that purchase, he had acquired 2 life insurance policies on the prior owners of that business. As it turned out, that was the only tangible value that the business had left. We went to the marketplace and we were able to secure a very timely cash infusion into that business, and it meant a lot to him and to his banker as well. And that's an issue that's often overlooked, as you were saying earlier on these policies, is businesses that own life insurance policies doesn't typically show up on the balance sheet or the financial statement. So sometimes businesses don't even think about it when they're being bought or when they're being sold. And in this case, it turned out to be a very important asset for the company. Carolyn, you've got a couple as well.
Yes, thank you, Todd. We're seeing more situations today where part of the estate plan includes the wealth holder making financial gifts to provide funds to a trust to pay premiums. What may surprise you is that oftentimes the insured and the wealth holder are not the same persons. So imagine what happens if the wealth holder dies before the insured. What happens to the gifts that were coming into the trust to pay the premiums? Is the policy self-sustaining, or is there an alternative source of funds? Well, commonly these trusts have friends or family that are serving as trustee. They may be what you would call accommodating trustees. But similar to corporate trustees, they also have fiduciary responsibilities to the beneficiaries to optimize the value of all the assets in the trust. So today, advisors like yourself that are on the phone, you may have clients that end up serving as an accommodating trustee. And I hope with the information we provide today, you would help that trustee determine or uncover what might be another value for that policy. Other situations we've worked in are more in the charitable role. You know, sometimes policies that are underperforming, they just simply become unaffordable for the charity. And so looking to the secondary market to sell the policy may produce some cash for the charity that they hadn't expected, cash that they can use today to accomplish their goals and objectives. So if you sit on some nonprofit boards, hope today you'll find you've got some unique information that if that time arises, you can help share that with the charity to help uncover what might be an unknown value that they have. Todd, was there a couple more you had to share this morning?
Yeah, a couple of quick ones. This was a couple of years ago. An attorney called us and said he had a client who was 92 years old. He had a $5 million policy that he was about to surrender. The known value was $18,000. And he wanted to know if there was a market for the policy. And I told him, as we always do when we get a call like that, is that if a third party objectively wants to buy your policy, it's probably a pretty good asset that you might want to hang on to. But he was emphatic the client was not going to pay any more premiums. It was an emotional issue. He was clearly going to let the policy go. So we went to the market and we secured over $1 million of unknown value for that $18,000 cash value contract. A very significant impact on the trust, and the attorney advisor was very, very pleased. And finally, as recently as last month, we had a client in South Texas, an oil man who was very heavily involved in the oil and gas industry, and we all know what's happened there. He had several policies that were in the jeopardy of being lapsed because he couldn't pay the premiums. Well, fortunately, we had several different policies, not just one large one, and we were able to sell one of the smaller policies to pay the premiums on the larger policies and keep them in force. So again, a very positive situation where the known value was much, much less than the unknown value in the sale. Celeste, we've seen a lot of impact with COVID and the impact on planning. Can you share what you're seeing from that standpoint?
Yeah, absolutely. So the handful of examples that Todd and Carolyn just shared are representative of the types of cases we typically see, where changing circumstances in a business or estate values, perhaps the policy performance or a source of premium funding may create a need to research that unknown value a life settlement in the secondary market can provide. But COVID has caused an impact, and it's mostly been to the policyholders because the life settlement market is still going strong and very competitive. Today, some individuals may find that they can no longer afford to pay the premiums on their existing policies, or they need the cash value to pay other essential needs, such as medical or custodial care. And conditions that overnight, now due to COVID, may be chronic, are causing the need for liquidity. So the liquidity need is today, not that future death benefit need like it may have been before. But as mentioned before, the majority do not even know that a life settlement is an option. You, as their trusted advisor, by making them aware of this little known option, may help them uncover an unknown source of funds, which I can assure you they will be very grateful for. So rather than watching your client merely surrender their life insurance policy back to the insurance company or letting the policy lapse simply because it's more convenient, you can help them avoid missing out on a life settlement opportunity, which may make a huge impact in their lives. Now, a question that we typically get is who qualifies? And it's also important to note who qualifies now post-pandemic as well. Mm-hmm. So generally those 70 and older who have had some change in health since the original policy was issued, or even younger individuals who may be living with a serious chronic illness. Second to die policies are also able to qualify. Generally, it's better if one insured is living, only one insured is living. Most often, buyers are interested in policies with face amounts of about $500,000 or greater. And in this case, longevity risk is what the buyers are evaluating compared to the premiums that they're going to have to pay. So really, how long are they going to have to pay those premiums going forward? But Carolyn, do you have some additional key things that we need to keep in mind concerning to life settlements?
Yes, thank you, Celeste. You know, what we find often is the ability to sell a policy really kind of comes quite as a surprise. So we thought maybe a little history this morning might be helpful. So if we go all the way back to 1911, there was a U.S. Supreme Court case, Grisby versus Russell. And in that case, they ruled that an insurance contract is property. And because it's property, it can be sold just like any other asset. In fact, it's really that ruling that we've used to help clients transfer their policies for various business, estate, or charitable planning goals. Texas now, like many other states, has a highly regulated life settlement market and requires special licensing for participation in that market. We feel it's a very good thing for the consumer. The buyers of these policies tend to be the institutional buyers. So think of the Warren Buffetts of the world, large pension funds, universities, endowments. Over time, what these buyers have seen that with a large pool of policies, this is a diversified, uncorrelated asset class, which over time continues to return a double-digit rate of return. So those buyers exist, and in today's low interest rate environment, they're out there looking for these policies. But like any other asset sale, you've got a buy side and a sell side. And on the buy side, the buyer is represented by a life settlement provider. And their job is really to get the very best price for their buyer, i.e. the Warren Buffetts of the world. So the life settlement provider who represents the buyer is who you're most commonly going to see advertised on TV or hear on the radio. A licensed broker, on the other hand, serves as a fiduciary to the seller of the policy. And their job is to represent the seller and to create competition among the buyers. And it's really this competition that creates the fair market value, or is what we're calling today the unknown value of the policy. When we assist clients with the sale of a policy, this is the process that we use to help them to cover and maximize their unknown value. So just important to know. So if you're working in a life settlement process, be sure and ask, am I working with the life settlement provider, or am I working with a broker who has a fiduciary responsibility to me, the seller? Todd, what would you add to today's?
And those are great points, Carolyn. And we are licensed. And when we did the policies initially, Texas did not have a licensing procedure. Now they do. Rebecca, I think we've got a couple of minutes. Do we have any questions we might want to try to tackle before we close today?
We do. The first one, they're asking if medical exams are necessary.
Okay, good question. Yeah, the buyers are definitely going to be interested in medical history of the insured, but there's no physical involved. There's authorization. The case I referenced with these two prior business owners, we had to go back, we had to find them, and we had to get them to agree to release medical information for the buyers to have a good understanding of what they were purchasing. Anything else?
Yeah, we have one that's asking, what about income taxes?
Oh, I'll take that
Carolyn,
one.
yes.
So policy owners do need to be aware that there are income taxes and now reporting requirements having to do with the life settlement. So we always encourage, collaboration, coordination with all your advisors so you clarify what is your income tax consequences of a sale. What many may not realize is that in the 2017 Tax Act, there was a provision put in there that changed how your income tax basis in a policy is calculated, and it's favorable to the taxpayer, and it's retroactive. So if people have reported sales, we encourage you to go back and review them with your tax advisor, because you may be able to recoup some of your tax costs. Great question.
Good. Thank you. Well, we're bumping up against 15 minutes, so we hope that we have exposed you to some things that maybe you were aware of, maybe some of you weren't aware of, and that your clients may have some very substantial unknown values that are out there that you can help them uncover. And we'd also like to close by a phrase that Carolyn heard the other day that I think is a good reminder with all the uncertainty we're facing. The quote was, remember, we are one day closer to a solution to our current situation. So as we face the uncertainty of our current day and time, we ask you to please stay healthy, stay safe, and we look forward to collaborating with you. Thank you all.
Thank you.
Thank you.